All right. So good. This is working. What do you know? Even a guy like me can do it. So
Yeah.
this originator program guide, I believe you've got a copy of this. If you don't, let me know, and we'll go ahead and send it out to you right away.
Yeah, we all have copies.
Okay, perfect. So we do have, it looks like we have an email set up for apps@m5funding.com, but I would ask for right now to just submit them to Andrea and to my email address directly, because we want to make sure that these get immediate attention when they come in. And so that's step one. You've got my phone number. Let me go ahead and give you Andrea's phone number also. What is that, Andrea?
801-833-0639.
Okay. Got it.
All right. And when we get this done, if you wouldn't mind shooting us an email that just gives phone contact information for each of you. I've got yours, of course, Coach, but for Tawana and Annette, that would be fantastic. So let's talk about the credit process a bit. I think this is the best thing to go through. So this is on M5's own in-house equipment financing program here. Let me just begin by stating that there will be a number of applications that won't necessarily fit within our program parameters. We have some companies with which we syndicate, and we can actually still do a lot of the deals that don't fit these parameters. Of course, we're kind of emphasizing these parameters, but just to clarify, for example, we're saying application-only requirements, as you see there in the upper left. Can everybody see that? So up to $100,000 on our in-house program, we can do application-only. The minimum requirements are for up to $75,000. It's 2 years minimum time in business and a 635 minimum middle credit score. If we go between $75,000 and $100,000, we need 3 years minimum time in business, and we need a 665 plus credit score. And so with that, we can go up to 75 or 100,000 on what we call our app-only program. Now, app-only doesn't really mean only an application. As you already know, Coach, we're always asking for 3 months bank statements along with the application. And I think we can talk in a little bit of detail about the bank statement requirement. We've already had an experience with this. I think it's good to cover. So we're looking at average balances. We're taking a look at deposits. We're not doing a ratio analysis of any kind. We're not really looking at a debt coverage ratio or anything along those lines. It's really at the app-only level, this is a lot simpler than that, but I'll show you a moment, and I'll send to you as well kind of a rough guide for the minimum average balance requirements that we're looking for different amounts of financing that people are requesting, right? So that will be a good guide for you, because what we can do, if they don't have enough in their business bank accounts, or they don't show enough activity in those accounts, sometimes we can actually shore that up by providing a personal bank account. So we can get 3 months personal bank statements as well, and that can sometimes make up the difference. That's not ideal, and I'm not saying it's going to work every time, because really we're underwriting the business here, not the person. But nevertheless, so we can make up for some shortfalls sometimes that way. So what we're looking for on an application-only submission is the completed credit application and the 3 months bank statements and a brief write-up. The write-up can be nothing more than a couple of sentences, but what we want to know is what kind of equipment they're financing, what they're going to do with the equipment, what the function or benefit of that equipment is. If they're replacing something, that's great. If it's going to save them money in operations, or if it's so they can expand their business, or take on a new contract or contracts, whatever it may be. We just kind of want to know what they're doing with it. And quite frankly, with some of these businesses, I'm not even going to know what the equipment is. We had some guy recently finance some kind of a juicer for $20,000, and I thought, my heavens, it sounds like one heck of a whopping sized blender. But I didn't know what he was doing with the thing. quite honestly, I never did quite figure out, but it's some kind of a industrial-sized juicing machine, 20,000 bucks. So he, explained to us what he was doing with it and so forth. And so we're going to run into some stuff from time to time. I'm sure all of us that we don't even know what that guy's doing or what his equipment is doing. That's okay. They can give us a brief explanation, and that'll help us out. So that's the basics right there. We also want to know, if it's not obvious, a little bit about the business and what they do to make money. We're saying on this little bullet point here, operations of the business. I mean, if it's dry cleaners, there's not much to be said there unless they've got something unique about their operation. But on the other hand, you get some esoteric stuff. As you guys well know, you're in the commercial mortgage business. Sometimes you find out that they do some kind of very elaborate or technical thing, and we don't even understand exactly what it is. So we just want to know, what the business is, what they do, a little bit of history maybe, and then just, okay, here's what we want, here's how much, here's the kind of equipment, this is what it's going to do for us. So does that make sense so far?
Absolutely. Makes absolute sense.
All right, perfect. And then, of course, on the application, we're kind of getting an idea of the cost of the equipment. And we also want to always know, and this is very, very important, if they're doing more financing than just with us, we want to know the total amount that they're financing so that we can properly account for that in our underwriting. In other words, maybe they might be going and getting an equipment app-only financing from us and 2 or 3 others at the same time, and we think we're financing 50,000 bucks, but they're really financing 150. So we absolutely need to have that disclosed to us. It doesn't mean we can't do it, but it may mean in some cases we can't do it, but we just need to know exactly what's happening so that we don't make a goof in our underwriting and say, oh, here you go, and we found out that they were way over extended. Does that make sense?
Okay. Yes.
All right. So that's for application only. That's pretty much it. Now, let me just back up one step about application only. As I mentioned, this is our in-house program. If we have larger requests that we need to syndicate, we can actually do an application-only transaction up to as high as $250,000. So, we just kind of take the lead on that. We'll put a couple of resources together. We'll syndicate it. We'll get them their $250,000. So, just so you know, these aren't the hard and fast limits. These are just our in-house limits, but we can also cooperate with others and put together something a little bit larger.
Okay, sounds great.
All right. So when we get to larger amounts, we're going to get to the full financials requirements. And Coach, Tawana, Annette, this is probably a little bit more along the lines of what you're already used to. You do commercial mortgages, and if you're doing something that's an owner-occupied type of a commercial mortgage situation, I'm imagining that what we're looking for here is very, very similar to what you're looking for in those scenarios. So probably more up your alley, although we all love the app-only deals, and I'd like to do about 50 of those a week with you. So,
well, our apps are typically, I didn't mean to cut you off there, our apps are a little bit different. Remember, we're in the private sector, not the traditional. So basically what we submit on our side when it comes to large-scale commercial is only a loan profile, PFS, executive summary, and a sources and uses form. That's it.
Oh, okay.
Yeah, so if you guys have any more, you'll just have to train us on what docs you need us to get, and that's no problem.
All right, so here we go. So on this page, so in addition to what we collect on an app-only submission, you'll see for submissions, this says here from 101,000 to 250. If we're trying to syndicate an app only up to 250, then this would apply for something at 250,000 up to, say, probably about, 350. It's a little bit touch and go because when we're syndicating, we've got different requirements. We don't know precisely, but it's not much different for, say, 250 plus or all the way up to whatever amount you may want to look at without limit. I mean, up to millions of dollars on one of these. The only difference is how many years of tax returns and or financials you need. So on our in-house program for $100,000 up to $250,000, we're looking for their last 2 years corporate returns, or if it's a large enough company where they have audited financials, they can give us those. We don't need tax returns. Now, typically when you're dealing with people borrowing, $250,000, $300,000, $400,000, they don't have audited statements, but you do occasionally run into that. And either or, returns or audited statements are equally fine. Okay, and then we're looking for a current year interim financial statement. So we need a P&L and a balance sheet. So right now, nobody's filed their 2014s for their businesses, pretty much. So as an example, we'd be collecting a 2012, 2013 corporate return, then we'd be getting a 2014 interim profit and loss and balance sheet from that business. And now that we're about the middle of February, pretty soon we're going to be wanting something a little bit more recent than that. We're going to be looking for something through January, for this year or whatever. But we need to get the interim statement as current as we can. Part of that interim statement would be something that we call a business debt schedule. That's just a list of the debts that the business has. It shows the balances, shows the maturity dates, shows the monthly payments. And the purpose of that thing is so that we're able to actually run cash flow coverage ratios based on the statements that we have. So we know what their current debt is. We're not making any presumptions that way based on prior years or what have you. And it also, the business debt schedule helps us to differentiate between the personal debts and the business debts, because sometimes on these small businesses, the business debts might show up on the personal credit report or vice versa. So we want to differentiate because we're actually underwriting both a business cash flow and a personal cash flow situation at the same time. And then we put it all together and we do what's called a global cash flow coverage between the two. But we got to be able to distinguish between the business debts, the personal debts. So that's what that debt schedule is. So actually, let's make a note, Andrew. We got to send them out a copy of the debt schedule. We got a form for that. We'll send that out to you. Get it out to you right after this, Coach.
Awesome, no problem.
All right. So, and then in addition to the business returns or audited statements and the debt schedule, we need the last 2 years personal tax returns on all guarantors. Now, anybody who owns 20% or more of the subject business is considered to be a key principal, and we need their personal tax returns. Now, oftentimes there's only one owner, or maybe it's husband and wife, or maybe there's two partners. We usually don't have like 5 different returns, but if you have 20% owners, then we're going to wind up getting 5 sets of personal tax returns on these full doc deals. And then we need to have a personal financial statement on each guarantor also. A lot of times they don't have that all put together in a good format. We've got a form that we use for that. We actually just use the same form as SBA uses, and I'll send a copy of that out to you as well. So that's pretty much it. We get all that stuff. So here's what the process looks like on one of these.
Okay.
We'll kind of go through this. So we get the application, we get the 3 months bank statements, we get the little write-up, and on an application-only deal, we should typically be able to turn that around in less than 24 hours and get you an approval. And so let me just say this. We're going to get to this a little bit later on this document. There's a little box that shows, and you guys have probably already seen it since you've got the doc, but it shows the credit scores, time in business, and credit grades. We could quote somebody something, fairly quickly based on what we think we know. I'm going to say about 80% of the time, that's probably going to be just fine, maybe 75% of the time. The trouble is that there's another 20 or 25% of the time when we end up having something come up when we pull other business credit reports on the back end. So we're going to pull up a Paydex score from Dun & Bradstreet. We're also going to check PayNet for ratings from their vendors and so forth. And so my admonition, my caution to you guys is don't be too definitive about what the payments may be. Yeah, we know that typically we can give them anything from a 1 year to a 5 year or even a 6 year term, but and we know approximately what those may be, assuming certain credit criteria, time in business and credit. But there's going to be, a fourth of the time when we've been totally wrong about that, because when we pull up those other scores, we find something that surprises us.
Sure.
So my advice is that, kind of the rule of thumb is get the app. Get the app, get the app, get the app. Tell the client, hey, we know about what this might look like, but rather than steer you wrong, let's go ahead. This is just a one-page application. Let's go ahead and get it in. They'll pull credit. We'll turn this around in a day or even less. We'll be able to tell you exactly what you qualify for, and from there you can decide if you want to go forward or if you don't want to go forward. But no harm, no foul. It's not going to cost you anything. You're not obligated. So it's just a little bit safer to get them to play ball with us and give us an app first before we actually talk brass tacks on terms and do it up front. Does that make sense?
Absolutely.
And it's so quick to turn around anyway that it's really not a hassle. I mean, if we were asking them to give us stuff and wait 2 weeks and it was a big giant pile of stuff, I could see people saying, well, hey, give me a ballpark idea, But it's so simple on an app-only deal. There's really nothing for them to lose, nothing for them to be, unreasonable about. So now on the full financials deals, we're talking about collecting these tax returns and financial statements and whatnot. Obviously, it's going to take a little bit of effort. We have some calculators that we can share with you so you can kind of give people at least a ballpark idea of what the payments might look like for them. Because the thing about the equipment financing process is that there isn't a quote-unquote interest rate. They just use what are called payment factors at each credit grade. And there's never going to be an interest rate on the closing docs. There's not going to be a disclosure like that, of course. I mean, you guys don't do residential anyway, but you're probably familiar with the fact that there's, truth in lending and other regulations that an APR is shown. There's nothing like that because it's not an interest rate. In fact, a lot of these aren't structured as loans at all. They're structured technically as leases, and the closing documents are lease documents. So what we're going to use is payment factors, and we can use a calculator to help you get to a payment factor. Or you can give us a call and we can say, we kind of discuss the deal, the type of equipment, and whatnot. We can kind of say, here's a ballpark. Now, this ballpark is assuming that we know what term they're going to be approved for. Let me just tell you what happens. If somebody has something weak about their credit profile, about their financials, whatever, sometimes instead of being declined, they'll just be put in a lower credit grade, but they'll also be given a shorter term option. So they may not be given the option of having a full 5 or 6 year term. They might only be allowed to have up to a 3-year term. Why? Because from an underwriting standpoint, that decreases the risk because you're collecting the principal so much faster. So you're decreasing the time that the money's at risk. You're getting that balance down quickly. So sometimes you can't even tell them ahead of time what kind of term they're going to get. So my advice is you can kind of give them an idea, ballpark, but at the end of the day, we still need to get the package in and turn it around. And now, even on these full financials deals, just so you know, once we've collected the tax returns, the financial statements, and whatnot, and we turn it in to underwriting, it's only going to take us from 24 to maybe 48 hours to get an approval. What I love about this business, by the way, as you guys may very well appreciate, is that just like with us, when we're doing a commercial mortgage, at the stage where we turn all that stuff in, what we get back is typically something along the lines of a proposal or an LOI. And at that point, we're being required to go back to that borrower and have them sign the LOI, put up a deposit, maybe a good faith deposit, at least a deposit for third-party reports like appraisal, environmental, maybe an engineering report, whatever it may be. So at that point, we're going back and getting a signature deposit. Now we've got another 30, 40 more days to go before the loan closes. Well, the great thing about the equipment financing business is we go straight from that approval to closing docs. There's never a stage where they've got to put up some kind of a deposit on these types of transactions. They just put up their advance payment when they sign the closing docs. So So it's a real quick process to get from collecting all this data to getting them an approval and showing them exactly what we can do. When we get you the approval back, in either case, whether it's application only or full financials, what's going to happen then is you're going to see what your par pricing is. And you're going to instruct us, okay, here's how much we want to build into that deal. And we'll tell you on each transaction how much is available to be built in. So, for example, on most app-only deals, at least up to $75,000, you'll have the option of building in up to 7 points. On the larger deals, up to, say, $1 million, you'll have the option of building in up to 4 points in premium on the deals. On larger deals, it's going to be a little bit less than that. It'll be somewhat case by case. I do want you to know, though, because of the nature of transactions you guys participate in, and you know, Coach, you and I have talked about this. You guys do a lot of large ticket transactions, and so I know you guys are in those kinds of circles, and you'll run into the same thing here. One of my great resources in this business that we can syndicate with is actually the former head of the entire equipment finance division for Bank of America, and his partner is the former chief underwriter for all of CIT Financial, and they've put together their own company. And they actually funded a $300 million deal in 2013. So you can do very, very large equipment financing transactions too.
Oh, wow. Awesome.
So if you run into stuff like that, don't hesitate to run it by us, because there may be a way of getting it done. It doesn't tend to be, you know, venture situations, startup situations, that kind of thing. But if there's a going concern, and they're doing some kind of expansion or renovation or whatever, they're in need of a lot of equipment, that's doable. And right now, just so you know, I've got about a $10 million deal I'm in conversations with. It's a bunch of recycling equipment that turns tires into fuel. This particular company's been in business for, you know, quite some time. They're building a new plant, and they're installing about $10 million worth of equipment with it. And when we get to those size of deals, we will end up doing proposals, and there oftentimes will be some kind of a good faith deposit or third-party report deposit so that all the due diligence can be done. You know,
Sure.
But that's kind of the exception. Anything up to $1 million, we don't need any of that stuff. It just goes straight to closing docs. How do you like them apples, huh?
Oh, I love them apples.
I love them too.
Listen. And we're very used to, matter of fact, one of our clients had to just inject his cost to do business the other day on a international loan. So we understand the cost to do business and due diligence. We actually had to train our consultants that way in my former company. So, yeah, we're fine with that part if we have to do that. Real quick, I have a question real quick on the, you said on the 24-hour turnaround. I want you to just explain that, how you explained to me. That's just on a pre-approval, am I right, or is that straight approval?
We can actually get a full approval if our app has everything that we need. Now, you know, Coach, you've already experienced, if we're missing a thing or two, then what happens is, hopefully, and I think we did a good job of this on this first app you sent in, within a pretty short time after I got the app, we're back to you saying, hey, we're missing this or that piece of information. And then you were very quick to turn that around. And then, you know, we were able to go ahead and kind of run it up the flagpole because we saw some issues with the bank statements without credit yet, just to get to an idea as to what the max would look like. If we see an application that doesn't work in some way, hopefully within the first 24 hours, we're going to turn around and say, okay, we're either missing this or that, or hey, we can only go up to maybe this much money for this particular client, not the amount they're requesting. Can you go back and let us know if that's going to work for them? And if it works, then we can proceed. If it doesn't work, then we just drop it. But if we have an app that's got every single thing filled out on it, we've got all the bank statements, everything works, we can actually get you a complete approval in 24 hours.
Okay, awesome.
And now, what happens from there, let's talk process just for a moment. We're going to request, you know, invoices and so forth from the vendors from which the equipment is being acquired. And what we're going to do from there is we're going to get in touch with the vendors and make arrangements to fund directly to them. So what happens is the vendor is the one that gets the money advanced. The equipment is delivered to the client. The client gives us an advance payment when they sign their closing docs. Typically, it's a first month's payment. Sometimes it's a first and last month's payment. Other than that, we've got 100% financing on most of these, unless we're really talking about going someplace outside of our guidelines for our in-house program, in which case, with lower credit scores and so forth, we can actually come up with situations to mitigate, get someone approved, or maybe they're going to have to put 20% down or 30% down, or in extreme cases, it might be even the hard money equivalent of an equipment financing situation where they can only get 50, 60%. But that's not our in-house program. But typically, they'll pay their advance payments, first and last month's payment, and we go ahead and fund to the vendor, and we're done. And as soon as the vendor is funded, then we're able to wire your premium to you. And just so you know, on those closing docs, nor anywhere else does what you're getting paid appear. There are no disclosure requirements in this business at all. And as you already know, there's not any kind of licensing or legal involved with this. It's just kind of an unregulated business for the most part. Although, in saying that, I always have to do this. I've got to do my CYA. I've got to say I'm not an attorney, so it behooves you to, and you're responsible to check in your own locality whether there's any kind of regulations involved in being involved in the equipment financing or brokering of equipment financing. But I will say, to my knowledge, there is none. So.
No, and to my knowledge as well, it falls into the private funding sector, and it's not highly regulated. We've been operating on gentlemen's rules here, Joe, for a long time.
Yeah.
And I like to be a gentleman and keep it that way. So,
I'm with you, my friend.
Yeah, man, I'm licensed out, man. You know what I mean?
Yes. Let's keep the bureaucrats and the red tape out of this.
Yes, sir. Yes, sir. Now, if you catch wind of anything, and if they come down and say, "Hey, look," I had RESPA actually call me when I was in Texas, my first round, 2005. Man, we had so many consultants coming on board at one time. RESPA actually got a hold of us, and they had a discrepancy. We couldn't call ourselves agents, and so in order to play the big boy game there in Texas, I said, "What do we need to call ourselves?" He said, "Call yourselves consultants, and I think we'll be fine. Have a great day."
Oh my gosh, it just kills me.
Yeah, so it's all about keeping the money flowing, man. If you're sending in good business and doing straight paper, they don't chase you around much.
Yeah, right. That's right. Hey, my experience concurs with yours, Coach. So, okay, so one thing I want to mention on the full financials. So on larger deals, the only difference you'll notice on this little checklist is that we got 3 years of corporate returns or audited statements and 3 years of personal tax returns on the guarantors instead of 2. So if in doubt, collect 3 years. If you're doing a $500,000 deal and it could kind of swing either way, collect 3 years worth. So the only differences that we have on app only and the full financials in terms of turnaround up to about $1 million is that the full financials ones are going to take 48 hours to underwrite, and sometimes maybe even 72 hours as opposed to 24 hours or less. And that's simply because there's a lot more spreads to do and documentation to read through and enter in and so forth. We've got to get all those numbers in there and run ratios and so forth. But once we get the approval back, it's typically, again, hey, we're ready to go. If you're ready to sign, we're ready to send out closing docs. So we kind of skip the whole proposal stage because we just get closing docs out instead. The closing docs do all the talking. Here's the terms, here's your advance payment, here's your payments, so forth. All they do is sign those, get them notarized, they get them back into us. So one of the things I just want to mention, we don't have any delays on our end of closing these things, but the one thing that might delay transactions closing and funding is oftentimes the vendors. So, for example, I was just talking about a little juicer deal. They actually build those to order. So what happened is the vendor says, well, okay, great. We're ready to build this thing now that we know that our client is approved. So it took them like a week and a half to build the machine. And once the machine is built, once it's delivered, we actually, typically on most transactions, we're going to send out somebody from a company called QuickTracks. QuickTracks is just a nationwide concern that has people everywhere that will go out, look at the serial numbers on the equipment that's been installed, verify it's there, take a few photos. We just verify the equipment's been delivered and installed. They let us know, and then we fund. So we have to wait to fund until the equipment's been installed. That's the one delay to funding sometimes. The other thing that might come up from time to time, and this is actually a big benefit to the vendors, is something called pre-funding. So like in the case of the juicer guy, he wanted to get some money down. Well, our client didn't have the money to put down, but what we did was we got the vendor very quickly approved for our pre-funding program. We were able to we can give him up to 100% of the money in advance to start building the equipment, and then we just have to verify it's installed. But typically, pre-funding is going to be more like 50%, but it enables us to get the vendor money to start a job. For example, I was talking to a solar panel company here recently. So some of their installations might take 3-4 weeks, but they need money to get the equipment to begin the installation. So we could advance them that money. They go out, they do the installation. 3 weeks later, it's done. Then we send out quick tracks, we verify it's done, everything's installed, and we fund the deal. So just to make you aware of how that process goes down sometimes. So
awesome. And Annette is actually on the line. She's on the dial-in line. Are you able to get that number, or you just went straight into the computer? She dialed in on the telephone line. So she's watching from her computer, but actually dialed in on the line to listen. So I don't know if you know how to work that end of it. But one of her questions is, real quick, if you're trying to figure that out. She says, what is the minimum loan amount? And also, is the payout on the loan for 30 days? If app, is the payout still 30 days?
Okay.
On an application loan?
So we can actually finance as little as $10,000 on the app-only program.
Okay.
I'm not sure I understood the second question. Could you rephrase that for me?
Well, I'm thinking what she may be asking, does it take 30 days to pay out even though it's an app-only loan, or is the payout pretty quick?
Oh, no. What happens as soon as we fund this to the vendor, generally we're going to be able to, and by the way, that's as soon as the vendor's ready. So let me just kind of take a timeline here. Let's say that you submit an app today. Everything's on that app. We approve it. Let's say we approve it in 24 hours. Everything's good. We request an invoice from the vendor. Let's say we get that right away. Maybe the client already had it. We go ahead, contact the vendor. We arrange for funding. Maybe 48 hours later, we have closing docs out to the client. Client signs those docs. They get them back to us electronically, but then they also overnight the originals because we have to have original signatures on them. So we would go ahead and then verify that the equipment's installed. We'd send out quick tracks and or make a phone call to that client to verify the equipment is installed. We verify it's installed. We'll go ahead and fund immediately that day. We can't actually release the premium commission until we get the original docs back in our hands. So that's how it could literally, something like this can go down from start to finish and funding and money in your hands in less than a week.
Oh, wow. Cool. Awesome.
Doesn't always go that way, as you guys well know. You're in this business, and
oh, sure.
Murphy's Law, right? But I mean, it can go that quickly.
Murphy and Murphy's brother.
That's right.
So, and the credit, and just to reiterate, credit score has to be 635, right?
That's minimum. The minimum on the in-house program. If you've got somebody who has good financials but their credit score is lower, then let's submit it as a full financials deal, and we might be able to get it approved even though they got a lower credit score. I mean, it could be down even into the 500s, and they may be, after underwriting, requested to put 10 or 20% down or more to make the deal work instead of just the first payment or first and last month's payment. But we still have a way of getting those things done. And the funny thing is, if you really look at it, a lot of the banks, even if they do equipment, which a lot of them don't, they're usually asking for 20 to 35% down anyway. So even when we've got somebody with a low credit score, number one, we'll turn it a lot faster. Number two, we're not really financing any less than the bank. And the bank wouldn't touch a guy with credit like that, So, yeah, we'd still want to look at those apps for sure, even if the credit scores are lower. It's just that we'd be syndicating that deal out, and we wouldn't do anything below 635 on an application-only basis. You'd have to do full doc.
Exactly, no problem. All right, yeah, and you know, one of the things is real quick if you can, because a lot of my team members, you know, we're a little rusty when it comes to the docs and everything. Credit, we haven't dealt with that in some years. So can you explain to everybody on the line right now the difference between the business credit and the actual personal credit, the payback score, etc.?
Sure. Yeah, it's just a different bureau that compiles the information, not subject to all the same consumer laws as other credit bureaus are, but as opposed to collecting data from their mortgagor, from their credit cards, their banks that finance their cars, and all those types of personal things, what they're doing is looking at business and commercial loan history only, and also supplier relationships. Vendors, if they slow pay on those vendors, a lot of times they have net 60-day terms with vendors where the vendor delivers them, raw material of some sort and expects to get paid in 60 days. If they're late on that stuff, that all pops up. If they have NSFs at banks, or they have any negative reports from banks, those for commercial banking accounts, those things would pop up. So there's a Paydex score. Doesn't look anything like the FICO scores. It's a 2-digit number generally, and it just is kind of a composite that's similar to the FICO scores that we're used to on the consumer side that says, okay, this is how creditworthy this particular business is. But it's on the business, it's not on the individual. So the Paydex is a score. The PayNet is more of just a report that comes from vendors and banks and suppliers and so forth that all subscribe to PayNet so that they can report, and everybody can kind of help each other keep an eye on who's paying their bills on time and who isn't. And so sometimes we really get like a great personal credit score, but we get a big surprise on the Paydex or the PayNet. So that's my only caveat, is even though it looks really, really good, like I say, the rule number 1 really is get the app. Rule number 2 and 3, get the app, because it doesn't take much for them to do it. As you guys will see in a moment, if you haven't seen already, it's just a 1-page application, one side of an 8.5 by 11 page. It's a really easy app to complete. Probably takes somebody 10 minutes to do it maybe. We're not asking for much. The bank statements, that shouldn't be very hard for them to deliver. If we have to go full financials, of course, they're going to have to make a little bit more effort and provide us those tax returns and financial statements and whatnot. But really, the safest course, the best course is get the app, because then we can tell them exactly what we can deliver. And to touch on that too, by the way, I just want to mention, I think I mentioned this on our equipment financing webinar we did for the general public out there, but when I'm quoting these things, from a sales standpoint, you guys, I'm never starting with the longest available term. If what they're doing might possibly allow a 5-year repayment term, I'm starting with maybe a 2-year term when I'm giving somebody a ballpark quote. There's a lot of psychological reasons why, and a lot of logistical reasons why I'm doing that. Number 1, we don't want them to think, how low can my payment be necessarily? We want them to think, okay, great, I can get financing for this equipment.
How fast can we pay it off?
Exactly. Yeah, and what's my ROI going to be from this new equipment? How much money is it going to make me? And from a logistical standpoint, if we get some kind of an approval where either the credit score or credit grade is a little lower than what we expected, and/or because of some bumps and scratches, on the deal, that we're only allowed to go to a 3-year term and not a 5-year term, we'd rather give them a little bit of a positive contrast than a negative contrast, so we say, oh, well, actually you can get a payment as low as this. If they like the first one, the second one's easy to sell, but if we start at 5 years and they get bumped down to 3 years in the credit process, that might feel like a hard sell. And if they, we quote them 2 years, but their credit's bad and the payment factors they have are a little bit higher, but we can make up the difference by offering them 3 years or 4 years. Again, it's setting up a positive contrast. So I'll never forget this experiment I read about in a book by Dr. Robert Cialdini. It's a great, great, great book, guys. It's called Influence, The Psychology of Persuasion. And he talks about his classroom in Arizona at the university there, where he'd have his students come in, these psychology students. He'd set 3 buckets of water in front of each chair. On the left hand was a burning hot, almost boiling bucket. On the right hand was a freezing cold, almost an ice cube, but still liquid bucket of water. And in the middle was a room temperature bucket. And he would have the students put one hand in the hot bucket and one hand in the very cold bucket and leave it there for 30 to 60 seconds. Just sit there with their hand in those buckets. And then he would instruct the students to pull their hands out of those buckets and plunge both hands in the middle bucket. And they would get these freaky expressions on their face like, what in the world is going on here? Because they would swear on the one hand that the water was freezing and on the other hand that the water was hot. And what caused them to think that was the contrast. So the hand that was in the hot bucket thought this water was really cold. The hand that was in the cold bucket thought this water was really hot, but it was the same bucket. And he used that principle to convey psychological contrast as well. So if we quote somebody a 2-year payment and then we end up being able to get them 4, it sounds really, really good. But if we start at a 5-year payment and we can only get them approved for 3, the contrast is a very negative contrast, right? So, so just from a logistical standpoint and a practical standpoint, because these things might surprise us. We want to get the app and we want to start off on the, lower end of the term scale and somewhere in the middle on the credit scale, probably, and making our assumptions if we have to give an initial quote. But I'm going to say that for the most part, you don't have to give much of a quote to get an app on an app-only deal. When you're going to get a full financial package submission, those guys are probably going to want to have at least some idea what this might look like before they go to the work of gathering up all those tax returns and financials, But we're here to help with that. We're here to help with that stuff. So, all right. Any questions at this point so far here?
No. So far you've explained, everything thoroughly. I don't know if Annette, are you still able to hear us, Annette? Okay, Annette still must be muted, but no, everything's pretty clear. And Joe, we thank you so much for breaking that down for us. It's a lot simpler still than what it used to be for us as loan officers.
Oh yeah.
I love the idea of basically submit it and quit it, and this is a perfect match for us. Let me ask you this real quick while we're all on the line. I know you've been around the block for a while, and you probably have been you said minimum loan amount was around $10,000, right?
Right.
Okay, good deal. Also, Joe, you've been around the block for a while. What's the best way to actually get our phones ringing on this, man?
Well, there's a couple of things that work really, really well. This is in no particular order because all of these things work pretty well, but these are my favorites. One is calling on bankers, particularly those at community banks, and getting them to refer this kind of business. Because a very large percentage of these community banks, they just don't even do equipment at all. And a lot of the ones that do it badly, they don't like it. They're not comfortable with it. So, for example, I used to work at a bank, community bank here in Utah. Someone coming in and asking for equipment, they would just kind of like go in the back office and grimace and go, oh, what are we going to do? This is a good client. They want equipment. We don't know anything about this stuff. Well, maybe we can offer them, 50% loan to value. Or, they just didn't know what to do with the stuff, And there are some that do, but even if they do, they're not doing application only. Now, let me just say there are some big banks out there like the Wells Fargos of the world that do equipment finance, and they do it very, very well. But for the most part, banks aren't big on this, and most of them don't do application only, and most of them can't go as low as we can credit score wise. And a lot of them that do it as an equipment loan where they're looking for 20 to 35% down. Now, also, there's a big disadvantage between the way a bank does this and we do it. The banks are generally, if they're going to finance equipment for a business, they're going to take a blanket lien on all the assets of the business. So they're effectively tying up everything in that business. We do not do that. We're only taking a lien on the subject piece of equipment. So we're not precluding them from getting other financing without the bank's permission or our permission. And also on bigger deals, we're talking the larger ones, 500,000 to $1 million and plus. We can actually do what are called operating leases. So the lease doesn't show up as a liability on that company's balance sheet. All it does show up as is a rent payment on the P&L, so it doesn't impact their ratios and therefore their borrowing capability. So a lot of big companies like to do this stuff this way because it's essentially off-balance sheet financing. So 100% financing, quicker turn, not tying up all the assets, being able to do it off balance sheet. All these things are big advantages, and just a lot of banks just don't do this stuff anyway, or they're very weak at it, or really, quite frankly, don't want to do it. So banks are a great, great source. Secondly, I would say the kind of the king of the hill, the ultimate, the biggest, best, baddest source of this kind of stuff, of getting this kind of business, is really going to the sellers of these types of equipment that need financing. Now, let me say this. When you're new in the game, I wouldn't make that my first stop. I'd get half a dozen or a dozen deals under your belt first so you really feel conversant with the process, because in some cases, nobody's competing for their business. So we're talking to a couple vendors right now that nobody's talked to. We've got a guy who's a office furniture dealer, sells cubes and furniture and whatnot. Went to lunch with him yesterday. He's really not getting hit up, surprisingly enough. Some of them have 5 different guys beating down their door every week trying to get their business. And some of the equipment dealers even have in-house financing. Like if you go to a John Deere dealership, they've got John Deere finance. Like if you go to a car dealership, you go to Ford, they've got Ford finance, right?
Harley Davidson.
Yes, right. Oh, you're a Harley man. So, we're not going to be able to compete with the in-house financing because they're giving away the financing for free and making their money on the actual equipment. So, but the vendors of this equipment are to us just exactly like a real estate agent would be to a residential loan officer. It's a great place to go get deals because if they're making a living, they're doing deals every month, and they can refer those to you. And we can do the same thing with the sellers of all these different kinds of equipment. But again, my warning is, I would say not to do that, not to hit those sources until you got a little bit more time under your belt, because you win them over the same way a residential loan officer wins over a real estate agent, which is with great service and knowledge and whatnot.
You gotta court that client, man.
Yep. Absolutely right. So, but you know what? Ultimately, when you kind of get your legs under you, a couple of good vendor relationships can keep you living in style. Just a couple of those by themselves, with the flow of deals they can give you, right?
Exactly.
So another source I really, really like is the commercial real estate brokers, and I'll tell you why I like them. And that's a good source for the other kinds of stuff that you guys may be doing from time to time too. So that's kind of a double whammy. But I like it because a lot of times you go in those offices, and what I found, at least in my experience, and it may be different in different parts of the country, but I'd say, probably a large percentage of them, I'm talking maybe more than half, really focus on leasing of space instead of selling of space. Well, it doesn't really matter whether they're selling or leasing space. If they're selling or leasing, say, office space, industrial space, retail space, then what goes along with a whole bunch of new space is what? Typically, new equipment.
You got to fill the space up.
That's right. If I'm going to take on another 20,000 square feet of office, I probably need furniture and cubes and computers. I might need servers and things like that. If I'm going to take on another 10 or 20,000 square feet of industrial space, I probably need machinery to fill that up so I can make whatever I make and do whatever I do. And so, you know what? if you can get these guys to see that this can be another profit center for them and that there is no conflict of interest because it's not real estate related, they're able to be paid. It's, they can be a great source for this, really a great source. They're talking to people all day that are expanding and moving and replacing things and doing things. So I like that source. Another one I really like is accountants, because they know when their business owners are growing and expanding and whatnot. And again, they also know which guys can go to the bank and just command whatever they want. They know which guys can't do that. And since we can do application only, we can get people up to $250,000 that way. Accountants can be a really good resource for this. So those are probably my top picks, I would say.
Joe.
Yes.
What about the IT guys that work for those companies?
You know what? They could be a great resource, because every time they need more stuff, they're probably going to have to get it financed, or at least that's an option for getting it in there. Yeah. Good thinking. Very good thinking. So, yeah, and by the way, the range of equipment is staggering. I mean, I've been involved in transactions regarding financing of aircraft, or planes and whatnot, a security boat, let me think, what else? Mining equipment, train cars, and then you got everything all the way down to, computers, and frankly, we even allow somebody to finance software only. Let's say someone's getting a new $40,000 point-of-sale software system, or some type of medical software, specialized medical software. We can finance that. It doesn't even have to be a tangible, right?
Right.
So it really covers the gamut. And the vendors of those kinds of things, they'd probably love to hear from us. Medical equipment. There's a couple you'll see on this guide that we have here. There's a bunch of industries and equipment types that are kind of on the restricted list. There's a lot. That's just a shorter list. If we tried to list everything we could do, the list would be about 10 miles long. So we have to list what we can't do instead. But even some of the things on the no list are actually doable under some of our syndicated programs. So, okay, well, so any questions on any of that stuff so far?
No. Sounds like you've covered just about everything that we need on the front end. It's a matter of getting started and getting going.
Awesome. Okay.
And just to give you a heads up on the young man that actually we had to go back and get try to get the personal bank statements.
Yes.
Yeah, he wants to hold off just for a little while. But that was good training, I kind of figured he might want to hold off when we asked for the personal. But nonetheless, it was still good training for me to actually know what to get up front.
Hey, absolutely. And you know what? This relationship here is a work in progress. So we have to all know on all ends that there's going to be a couple of bumps along the way in getting these deals done, just because there's a getting to know process here. But I want you guys to know we're very, very committed to this relationship. I hope that you guys are too. We can work our way through that stuff within a little while, getting a handful of deals done. We're going to really know each other. We're going to know how this process goes down, and it'll become very efficient, very smooth, and that's what we're looking for. Then it becomes very profitable for everybody.
Yes, sir. All right. Well, thank you a lot. We appreciate you guys. We don't have anything over here on our end. I think Annette got all of her questions answered as well. By the way, Andrea and Joe, and Annette has years of experience in the banking industry, the traditional banking industry.
Nice.
Awesome.
Yeah. So we all have our backgrounds, and we all appreciate the fact that we can just submit a few docs and move on to our next transaction. This eliminates a lot of headache as far as paperwork and legwork, and we work very well with staying in. I was in a Cav Scout unit when I was in the military. We went way ahead of the infantry, and that's the way I like it. We had a lot of perks. We just got shot at first.
Oh, great. Well, I'm glad you're here with no holes in you then.
There you go, man. The only hope, my wife, you know, I feel like, you know, at the end of the day, would feel like they wish they could plug some holes up.
Well,
But
you guys,
yeah, man, this is awesome.
all I can say is I'm anxious for you guys to do some business so you can give us an excuse to come visit you all in Miami.
Yeah, sure. And any excuse will do when you come into Miami. Any
That's
excuse
right.
will do.
So
Yeah.
I would encourage you to look at the rest of this program guide, and what we're going to do is we're going to send over to you. I've got a fillable application form also that people can type in if they want instead of write in. That's right here. We'll send that to you. You've already got our other application form. I'm going to send you over this little PDF here, which shows, and these are not hard and fast, but this at least gives you an idea. These are kind of the rough average ending balances and average monthly deposits that we're looking for on bank statements for different dollar amounts on up to $100,000. And
Okay.
you kind of extrapolate that out. So if you see something that looks weak, you can already say, hey, why don't you get us your personal bank statements also? You can kind of head that off at the pass. You know, again, on the application form, it really, what it turns out to be is that we really need every single box on that application completed in order to do the job on this end. So, you know, we'll get used to that. We also, I think I mentioned that we have a calculator that you can use that will kind of give you a pretty good idea. It's rough, but it'll give you an idea as to what payments might be for certain amounts. And that calculator is really designed to do, you know, deals probably up to about the 250,000 range. So above that, we probably should just get on the phone and we'll work out some kind of quotes if we need to do that to get someone on board to provide you the docs. But I'll get you a link to the calculator so that you guys, wherever you're at, you can pull that up, plug in an amount, plug in a term, plug in what you expect the credit grade to be, kind of get an approximate idea what the payments might be on the deal, you know. So that could be used as an aid in your you know, client process.
Okay. Sounds good. Thanks. Thanks a lot.
All right. Well,
Okay, I'm gonna send you the personal financial statement and the debt schedule, so you have those
Okay.
terms.
All right. So, thank you.
I need to send it.
link to the calculator, the fillable app, fillable credit app.
Okay.
All right. Hey, well, so you guys, I know we've gone a little over. You know, let's see how it goes, and if there's some issues that come up, maybe what we'll do is schedule a follow-up for a half an hour and go through a bunch of stuff that way. And by the way, I did record this. I'm going to send you a copy of the recording.
Okay. All right.
Go back, or if you want to share it with other of your team members as you are kind of phasing this in, Coach, you can do that.
Okay. No problem. Thank you so much. Appreciate it. And we'll be doing a training on tomorrow as well. So we've got about 10 to 12 new consultants that are with us. So we should be cranking up these engines here as early as Monday or Tuesday to start looking for some apps.
Fantastic. We will.
All right, just oil up the catcher's mitt, man. Get it ready.
We will do that. Matter of fact, guess what? We got someone. We're even hiring a little bit of additional help to kind of get ready here. So.
Well, that'll help out a lot, you know, in the interim. We look back at some of the things we've been able to see in this industry. We've been blessed tremendously. Now is the time for us. I feel like it's open season. Everybody's aware of what type of funding is available. Now it's just a matter of getting them in the door. So with this particular platform, you guys are helping us to further the mission and vision that, you know, that we have with our company. And we just pray that we'll continue to be able to do business, man, 10, 20 years from now.
Well, us too. You know what? Awesome. We love what you guys do too. And I'm telling you, when we run into transactions that don't fit our box, these large types of transactions you guys are doing, you'll be hearing from some of our people too.
Yes, absolutely. Well, thank you so much, you guys. We appreciate you, and we look forward to talking to you next week.
Thank
All
you.
right. All right,
All
Tawana. Take care. Take care, Annette.
Nice to meet you. I'll get these over.
Nice meeting you as well.
All right. Look forward to talking to you guys soon.
All right. Thanks, Coach.
All right. Bye-bye.
Bye-bye.